rise to speak to my Amendment 238, and I welcome the broad thrust of empowering and reinvigorating the development corporations contemplated by the bill. In fact, I think it's the best part of the bill. Now, Clause 96 seeks to the achievement of sustainable development and the mitigation of adaptation to climate change, but there'll be no sustainable development without sustainable financing of the proposals that the development corporations bring forward. Now, since the committee stage, we've had the New Towns Task Force, which published its report, and only this afternoon at question time, the noble Lord Wilson of Sedgefield gave warm words to the principle of private investment in local infrastructure, perhaps by development corporations. So the magnitude of the task ahead of us is nothing short of generational, and the state alone won't be able to build these new settlements by itself. The councils won't. We've heard in the previous group that the mayors won't, well, not quickly anyway. And only by harnessing the power of the financial markets and other private sector actors at home and abroad, including perhaps private households, will the promise of building these places become a reality. So my amendment, supported by my noble friends from the front bench, recognises this simple truth. It's time to bring the development corporations up to date. 50 years since Milton Keynes and 80 years since Stevenage was designated under the first New Towns Act. So I approach this subject in the knowledge that local authorities may be reorganised, that mayors may be created, and the day-to-day financial pressures they both face have never been greater. Now, in a former time, the development corporations would hold out their hand to perhaps central government or local councils for funding. And of course, that route may be still open in some part. But the PWLB, we know, well, that's capped. And at a time when Nestlé can borrow money cheaper than our government, the PWLB isn't necessarily the cheapest, best value or most available source of long-term infrastructure finance for the generational opportunities that my noble friend Lord Lansley has so ably identified. Building new towns is the work of generations. It goes beyond political cycles, and relying on national and local politicians will not be enough in a world where a new secondary school costs 40 million and a flyover 100. So we must help the development corporations in the single-minded pursuit of low sustainable development, and we must help them get the money right. And that means giving them the powers to exploit the distinction between funding and financing. Now, funding is just simply writing the cheque, but finance is putting that deal together. And it's no surprise that it's the financiers in the City of London are the most highly paid professions, because they've got the hardest tasks of putting those deals together. It's not easy to finance difficult prospects. But to get Britain building, we're going to have to grasp that nettle. Now, I'm not going to dwell too much on the significance of governance in development corporations, but I'll make the factual observation that strong governance, and strong governance established by statute, which is why I've made this amendment, leads to higher covenant strength, the ability to take a higher credit rating, and the willingness of institutional investors to pony up the cash early on for infrastructure at lower prices. That's why my amendment is so important. We need to make it easy for the development corporations to raise the funds, for the pension funds to put their shoulders to the wheel, helped by the covenant strength that comes from being a statutory body. And the development corporations must be empowered to engage in all manner of financial instruments, including the issue of bonds, shares or similar. And we should contemplate other sources of finance as well. And in my view, that extends into entering into joint ventures with landowners on a territory, whose land could be incorporated at the heart of financing as an in-kind contribution. So they don't enjoy the upfront benefit. They have a return that's sustained over the long-term period. That may be good for them. It's certainly good for the taxpayer, and it enables us to get the infrastructure built up front more cheaply. It shouldn't just be the default position. The development corporation just goes for CPO powers to pony up a premium price, 10% more than the market value, and sustain all the unpleasantness of the process. There must be a better way. My amendment pathfinds that opportunity. So a committee, the noble lady, rather complacently in my view, said the amendment was unnecessary because corporations could always borrow from the PWLB, and that was that. The bond markets are suggesting there may be limits to that approach, which is why we need more flexibility. So I want to place finance in the widest possible context, and without central or government necessarily acting as a banker in the traditional manner, the development corporations can be empowered. So whilst I accept development corporations can plan for an area and have regard to all matter of desirable outcomes, ultimately those plans or outcomes will stand or fall whether the money can be raised and the finance deals put together, and that's what my amendment seeks to achieve at the best value, the greatest certainty, with the cheapness, the value that comes from statutory provision.
I